Hey guys, Dave Keller here with Market Misbehavior. Today we're going to talk about one of my favorite candle patterns that still works on stocks and ETFs, the Bullish Engulfing Pattern. So I've spent many years working with institutional investors, traders, hedge fund managers, and lots of other people, individual investors and financial advisors. And one of the things that strikes me is how candlestick charts often pop up, right? Randomly, I will see someone using a candle chart and I'll talk to them about how they're applying it. And what strikes me is even as we've gone through decimalization and sub-penny spreads and dark pools and high frequency trading and algorithmic trading and all these other things, some of the most simple, straightforward approaches like a bullish engulfing pattern, which is one of the basic candle patterns, still works. And I think you'll find when you see them emerge on the chart, they almost jump off the page at you. Japanese candlestick analysis is a very visual form of analysis. It really started in Japan back in the 1600s. Rice traders used an early form of candlestick trading. And when I was in Tokyo a number of years ago, talked to some local analysts there about the history and rice trading, about the markets and what they knew about the candlestick charting of the day. Fast forward to 2023, and I think the visual representation of price data using open, high, low, close, using candlesticks can be a very powerful visual cue for changes in sentiment. So today we're going to talk about one of my most favorite, the most effective candle patterns called the Bullish Engulfing Pattern. We'll look at two different examples of what they look like, how they work, how to trade around them potentially, and how to tell when they're not working. Before we get to that, if you like this sort of thinking about technical analysis, behavioral finance, won't you subscribe to my channel? Also, give the video a like if you appreciate it. We'd very much appreciate that back. Put a comment below. Do you see any bullish engulfing or bearish engulfing patterns out there? Let me know in the comments. Now, we're going to look at a chart here of NRG, which is a utility stock you may or may not know. It doesn't really matter. The idea with the bullish engulfing pattern is that there are a couple parts to this. First off, the market has to be in a downtrend. That's actually an important part of this. With candlestick analysis, it's not just about the 1 or 2 or 3 bar candle pattern. It's about the trend in the market going into that pattern. That's crucial. As a matter of fact, some patterns actually have different names, whether they happen in a bull phase or a bear phase. Bullish engulfing patterns really need to happen in a downtrend. So you can see on the left half of the chart, downtrend has been happening for about a month now. Then you see this 2-bar pattern right here, a down day and an up day. And if you're not familiar with candlesticks, a down day is a solid candle or a black candle on my chart here. Think of it as something solid. It's a rock sinking down in the pool. So the open is the top of the candle. It's heavy and it sinks down, and the close is down here at the bottom. The up days are open candles or clear candles on my chart. So think of it as something light, it's open, it's clear, it's a balloon filled with air. So we open at the bottom of this body and we float up and close at the top. So the black or darker filled candles are down closes. The clear or open candles are up closes. So you can see visually, it's very easy to tell when you have 3 or 4 days of straight up closes, like today so far, 4th straight day of closing above the open. That tells you a little bit about the intraday dynamics, right, day to day. This 2-bar pattern right here is what's called the bullish engulfing pattern. We have a down day followed by an up day. And the second day's real body, which is the range from open to close, sort of the body of the candle here, engulfs the first day's body. And that's why it's called a bullish engulfing pattern. So think about what the trend and what the sentiment really tells you about this couple days of activity. We're in a downtrend for about a month. We have a down close, kind of normal, kind of expected, just more of the same negativity, bearishness in the markets. We gap down at the open. We actually open below the previous day's range. So we're opening at a lower level, but by the close, we've not just rallied above the open, we've rallied through the entire previous day's open to close range. So we opened lower and we closed higher, right? So the bearishness going into the open was alleviated by the close because buyers were willing to come in and buy in on the weakness and push the price above the previous day. That's called the bullish engulfing pattern. It really tells you about the next 1 to 3 candles are most likely higher, right? A lot of people see that and I think, all right, that's a huge buy signal for months and months. It's not really the intention. Candlesticks are designed to tell you about the next 1 to 3 days or 1 to 3 bars. That's how I usually think of it. But definitely telling you that the short-term sentiment is bullish. So that's a kind of classic buy signal on the chart of NRG. Now, what's interesting, if you look at ADI, we actually just had a bullish engulfing pattern yesterday as I'm recording this video. Now, talk about what happened here, right? Going into the pattern, we have 3 straight down days. We're getting down to an ascending 50-day moving average. And if you've watched some of the videos on my channel, we talk often about the 50-day moving average and the idea of the slope of that moving average, where the price is relative to that moving average. I'll even put a link in the description to one of my previous videos on the 50-day moving average so you can see what I mean. But the fact that we have this bullish engulfing pattern right above the 50-day moving average suggests to me that in the short term, buyers are coming in and are optimistic about the short-term prospects of the stock, pushing it from below the previous day's close to above the previous day's open. It tells you the next 1 to 3 bars are most likely higher than lower, and that's sort of the general idea. Now, what's important about candlestick analysis, something like bullish engulfing patterns, is to use it along with other techniques. So Western indicators like moving averages, oscillators like RSI, even things like trend lines and basic tools in the technical toolkit. The benefit of candlestick analysis is it can be used not outside of all those things, but along with, right, in concert, to complement what you're doing on your other components on your charts. So I often look at bar charts, but candle charts like this can be really helpful because things like bullish engulfing patterns almost jump off the chart at you. That's what a bullish engulfing pattern is. That's 2 examples with NRG and ADI where we've seen some bullish engulfing patterns recently. How do we think about it? One other thing I would say is, in general, how do you trade? I would say in terms of managing risk, thinking about the low of the bullish engulfing pattern, that low of day 2 is a really good sort of natural stop. So as long as we stay above that, the bullish sign is probably in place. If we would break below that day's low, that would tell you most likely that the bullish engulfing pattern did not play out as expected. So on the example of ADI, you actually look for support or a stop at the low of the second day, which lines up really well with the 50-day moving average right around $185. So as long as we hold above that, the bullish engulfing pattern is valid. We break below it, that might tell you that the bullish engulfing pattern not following through as expected. For Market Misbehavior, I'm Dave Keller. Be well and stay safe, and I'll talk to you again soon.